Hi everyone, my name is Inanula and I share years of personal experience in the fashion industry, giving you key insights into buying and merchandising skills. In fashion buying and merchandising, if you don't know these crucial math formulas, then you're guessing. And guessing in retail costs you money. Today, I'm showing you over 10 of the top most crucial retail math formulas the top retailers use to avoid costly mistakes and boost profit margins instantly. Every successful fashion retailer, from Zara to Selfridges, uses the exact same retail math formulas. Today, I'll teach you the formulas used by the top retailers so you can plan like the pros at an industry standard level. So, what I've done is I've compiled a fun little Excel spreadsheet, and what this has is all of the most prominently used formulas or calculations. And I guess what I'll do today is just go through it and explain it for you. So, this is a plug and play formula spreadsheet. So you just put in the your personal information, and what it does is it calculates the formula there. As you can see, we've got those formulas preset. So this is a really helpful template. And if you do subscribe to the member newsletter, this will be able for you to download, and you will have this document all to yourself, able to edit, able to change. You can see all of the fun formulas here that are explained, and what I'll do here is just take you through it. So I guess let's start from the top, right? So what we'll start with is your total cost. And your total cost is how much a style is going to cost for all of the units you're going to buy, not just the cost price per unit. So for example, here we have your cost price being the cost of a style per unit. And then your total cost is the cost of the style times by each of the total units. So if we keep going on, we've got explained what it's used in, and so this is used in range planning. It's also used in intake margins, supplier negotiations, and then your budget planning and your PO tracking as well. But what that gives us an indication of is basically how much we're going to spend on a style in its entirety. So I'll take you to a range plan to lift off some example units that we will put into here. And if we look at the first style, the blouse, the asymmetric ruffle blouse, the cost price is £5, and then your units, total units, are £1,000. So what that means is we're going to lift those two pieces of information and put it in here. As you can see, we've done your £5 and your £1,000, and then that gives you £5,000. And so that's how we calculate our total cost. The next formula that we've got is your selling value. And your selling value is your selling price times by your total units. That's what your selling value is. But here we've got it explained as the value of a style if all the units were sold. So it's basically, for total cost, we're looking at how much are we spending on a style in its entirety. For selling value, we're looking at how much will we make on a style in its entirety. So you need these two pieces of information, which are your selling price and your total units. And those are also listed here, so we can have a look at what that means. Selling price is the end price of a style for the consumer. How much is the consumer going to pay for this style? And then your total units are the total pieces per style. These are used in assortment balance, buy quantity planning, retail strategy, pricing tiers, margin planning, and obviously your range planning too. So that's where we've lifted this information, the £20 and your £1,000. If we were to go back to the range plan, we've got our selling price listed here. For the asymmetric blouse, it is £20. And then again, your total units are 1,000 units. So if we go here, that's the information we've put in here. Your £20 and your £1,000 gets you your £20,000. So that's how much we will make on that style in its entirety. So hopefully this is all making sense so far. If you have any questions or anything that you'd like to input, always drop a comment and let me know your thoughts or questions. So we're going to go ahead. Now we've got your gross margin. So I'll just go up a little bit. Your gross margin as a percentage. Now what your gross margin is, it's your selling value minus your total cost and then divided by your selling value again. Because basically what this is how much up from this value here of your total cost do we get to here, your selling value. That's basically what your margin is. How do we get from £5,000 to £20,000? What's that markup in a percentage? And so that's the formula for that. So we put in your £20,000, which is your selling value. We put in your £5,000, which is your total cost. And then your selling value again divided by, and then that gives you your 75%. So we can see here explained what a gross margin is as the overall percentage profit of a style after it's been sold. And that's used in profit analysis, financial reporting, that kind of thing. That's where we will put your margin in. And if we were to go back to the range plan as an example, your gross margin has been put in there as 75%. That's also being calculated there as a formula. See? So that's quite a good margin in general for your high street retailers. You'd aim for 70% and above margin. For a gross margin, that's your total overall. And then for your intake margin, that's how much it is initially when you take in the style. Because what usually would happen is you would have your markdowns and promotion and things like that. So your intake margin is slightly different because it's the intake percentage profit of a style before it's been sold. So you have your after it's been sold for your gross margin, and then you have your percentage before it's been sold for your intake, because this is more for pre-season margin planning. So we should have an intake margin percentage here. If you were to look at this cell here, sorry, just going in. Yeah, and so we can see here we've got your intake margin there as opposed to your gross margin there. They are the same at this point in time, because let's say you're at the beginning of the season, it will be the same because we would assume that we have sold at this selling price of £20. But what does happen is sale and markdown and things such as that, promotions, you give away 20%, you give away things like that, and then over time this selling value goes down, so your gross margin will eventually change. And when you update this data over time, this would usually be a feed coming in this figure. So let's say we sold in the first week full price, then in the second week we had a promotion on tops. The selling value is only going to be for the amount of tops there were left after the first week of selling, if that makes sense. And let me know if that's a bit too complicated or if I'm not making sense, but I'll just try and get through as much of this as I can. So now, as we go further along, you have your markup percentage. Your markup percentage is another way of measuring the difference between your cost and your selling price, basically your profit. And so the way you'd calculate that is you would say your selling price minus your cost price divided by your cost price as a percentage. So you can see here we filled in according to the tops data, which is £20 and £5 for selling price and cost price. And that gives us a markup of 300%. So that's really good. We've got our markup description here, which is the percentage difference between cost price and retail price. And it's used in pricing strategy. So you would use that when you're trying to analyze how the pricing architecture of that style. Let's say that style is your anchor style for the range. It's meant to give you your best profit, or you're going to do the best via that top. Then you'd obviously want the markup to be very high. And if it's not, if you don't feel like it's going to do very well, you wouldn't invest too much in it. So we'll keep going down. We've got next your markdown percentage. And your markdown percentage, we've got it described here as the reduction percentage from your original price tracked in sales or units. So how much are we reducing a style from when it initially went on at full price? Like I said with the top, if you sold it full price in the first week and then in the second week you had promotion. Okay, promotion is different to markdown, but let's say over now, after your promotion, after like 6 weeks of selling, it's time to go into markdown if you've still got a lot of units behind it, because it means it's not selling. And a markdown is a permanent markdown. It's your red sale. When you see those red sale tickets, that style isn't going to go back into full price. Whereas with promotion, it will be only a limited time offer, 20% off or whatever you have, and then it will go back to full price the next week. With markdown, it goes down to that price and it stays at that price until the end of the line. And that's used in promotions, clearance, margin management, right? So the formula for that is your original price minus your reduced price divided by your original price. And so what we're doing now is we're getting into the sales end of things. So we've been looking at the range plan for a lot of these initial formulas. Now we're in the selling period, in season. And so we're going to look at your sales line list for that top. So let's go on to the sales line list. We can see the asymmetric ruffle top. And we want to see the original price. The original price is, full price, you would say £20. And so that's what we've inputted here. And then you'd have your reduced price. So we've imagined that a few weeks later on, it's gone down to £13. Let's say it's done its course of 6 weeks, usually is a good run, and then now it's been reduced and then divided by your original selling price or your full price. That gives us a 38% markdown. So that's been marked down quite a bit. That's what we want to know. And then again, that markdown percentage will go onto your WYSI, which is your weekly sales stock and intake. And that markdown percentage will be put on there it will actually be put on as a figure to know what is your markdown spend. That's what it will be called on a Wizzy. So I actually do have a mock Wizzy, and just as an example, you would have your markdown listed here. We've not got markdown yet because that's like the first few weeks, but over time a markdown spend will appear in here in this column, because this is all formulated, so when we add in a figure here, it tells us how much stock is left in a value, because we want to know how much stock is in terms of money, how much money have we got to potentially make. And so that's another, all of these documents and Excel spreadsheets that I'm taking you through, I have, the available for download. And if you do want to join the member newsletter, you will get regular formulas, regular spreadsheet downloads, and all of the information that you need and want. And you can even request what you want. So make sure to join the member newsletter. It will definitely be helpful for grasping all of this information and capturing it for yourself, to have a bit of a play with these fun spreadsheets. And so now for your stock mix percentage, we have your stock mix as the percentage of each category that make up the total stock. And that's used again, of course, in your range planning, and it's also used in Wizzy Balance. So we use this to identify how much stock is sitting behind a total category. For example, our tops taking up so much of our stock mix, like they're not moving. And we also use stock mix and sales mix in comparison to each other, because if a style has such a high stock mix but such a low sales mix, it means that it's sitting there and it's not selling, and there's so many units behind a category, and it's all at a low price. So we don't want too much volume behind low priced styles or categories, and we want something to have a high sales mix. Obviously everything can't be the biggest sales mix, but we want things to have healthy sales mix in comparison to their stock mix. So now here we can see our stock mix is 29%, because it's your category stock divided by your total stock, and that gives us your 29%. So the fact that for this category, which is tops, the fact that the stock mix is quite close to your sales mix, 29% and 22%, we know that that's a healthy comparison. So we would use that also in promotions as well, because we'd want to know, okay, do we need to just push this category out and make sure it just goes. But primarily it's in the planning stage that we're looking at this, because you wouldn't plan it to be too imbalanced from the start anyway. So that's really that. And then your stock turnover is described as how often your inventory is sold and replaced. And that's used in performance KPIs and your end of season review. Now we're getting out of that in season performance and trading, and we're now in, looking back at your stock turnover. And what that is your total sales units divided by your average stock, and that gives you your stock turnover, which in this case is 2, because we're looking at it over the course of the whole season. That's why it says your average stock. So it's average stock for the course of some time, and you would identify that according to your your range and your seasons and how you plot everything. So it has to be taken for over a period of time, and you want your stock turnover to obviously be good, to be very high, because you want high sales and low stock in the warehouse or in your inventory, let's say, but not too low where it affects your sales. So it's a really interesting thing. It all needs to really balance out. But over time you learn how to play with that balance. So next you have open to buy, and open to buy here is how much you're allowed to buy based on sales and stock plans. That's used a lot in your monthly buy meetings, your budget sign offs. You really do not want to overbuy, but then you also don't want to underbuy. And so, again, like I said, getting that balance right is the tricky part. That's, where you make your money, or that's where you know, get your name for yourself. So, with your open to buy, the formula is your planned sales plus your planned end of month stock minus your beginning of month stock, and then minus what's on order. That's what your open to buy formula is here. And it's very tricky, this one. This one is more of a senior review thing. It would be done quite on a senior level. And like I said, you really want to get that balance right and make sure things like, for example, this one, what's on order, isn't getting overlooked, because sometimes when you're counting what stock you have in, you haven't accounted for things that are on order. There's always going to be something on order. It's like, it's an even flow of stock or drops coming in every week, and so you don't want to not account for that, because then you'll be overstocked. And that's how we keep up with that. So in this case, your planned sales would come from your Wizzy, and again, your planned end of month and your beginning of month stock, they all come from your Wizzy. Your weekly sales, stock and intake, and again on order is intake. So that this is very much information that's pulled from your Wizzy. And we can see here what we have as open to buy is £300. So we would go and we would rebuy or plan a new range with this budget in mind. And then in the next 4 weeks or the next few weeks, we would review it and look at it again. And then that's how we keep that rolling. Lastly, we have your average weekly sales. And so your average weekly sales are the average number of units sold per week. That's a nice simple formula. It's used in forecasting and delivery planning. And so also it's used in things like cover. Like, remember before where we mentioned knowing how much is going to sell in a week. So it's things like that. Predicting is what you would use your average weekly sales for, to predict. So you'd say total sales and then divided by the number of weeks, and then that's your average weekly sales. So obviously that's captured over a period of time. You want to say, okay, for the last month, what's our average weekly sales? This much. We're taking roughly £3,500 a week in the past month. And then we use that information to decide things like how much we're going to restock, or how much we want to go into promotion, how heavily we want to do promotion. Because if we're saying we're taking in 3,000 a week, but our stock is only like, let's say 1,000, obviously we're not going to continue making 3,000 a week because we're very low stocked. Or if we said we're taking 3,000 a week, but we're stocked on like 10,000, for that number of weeks, then we would know, okay, maybe we need to start going into a promotion region of at least for some things, and say, well, we need to start, chewing through this stock because the sales aren't as high as the stock. And that's really all I've got for now. Your Retail Math 101. All of these plug and play formulas, lovely for you to use. Let me know what you think. I hope this has been helpful, and drop a comment, and I look forward to hearing from you. So thanks for listening. The Access to Fashion member newsletter gives you direct access to practical resources, buying and merchandising templates, and industry standard tools that are expert approved. Subscribe now and get immediate access to exclusive downloads and practical tools that will give you a real edge and keep you ahead of the curve. Visit the link below to join now.